Welcome to the Market Alert for Monday, the 19th of August 2019. So, bond yields plunge most since Black Monday. Stocks stumble on week. So, let's have a look at the details from Friday. We'll start off with the Dow, and we'll start with the daily as well. So let's have a look. We've got the market moving higher. It's also moving higher on the overnight, again, back through the 200 bar moving average in the daily, and also the 5 minute, which we'll see in just a moment. Also, while we're here, the overnight market moving higher, and we drew in this 76% retracement in the previous market alert to show where we would get an area of potential resistance. So the market is attempting to move higher at the moment. Low volume for Friday though, which is a bit of a concern, but let's see how it pans out. So the detail for Friday, again, the 200 bar moving average, as you can see here, playing out as a major support, and then eventually, bang, we send off to the stratosphere, and we see prices moving higher, and then it remains sideways for the remainder of the session. But objective achieved here. You can see the market driving higher above that 200 bar moving average, which gives the impetus here, even though it's on low volume. So watch the 76% retracement area for this market. Meanwhile, news today, well, there is no news, so the market is likely to continue its assault to the upside as far as prices are concerned here. Meanwhile, in the pound, we just go back to the 50 minutes for Friday. It was a one-way bet, so we've got the dead cat bounce going on at the moment in the pound. We have the signal again above the 200 bar moving average. Prices move to the upside just in one direction. The move isn't as big as it looks because we're only 50 pips between these two lines. Nonetheless, the pound is higher there, and you can see this starting to happen in the daily chart as well. We've got a bit of a triangular shape going on. In order to move higher, it needs to break through with a lot of volume. You can see a nice bit of volume starting to build here as well, not too dissimilar to what we see in the Dow actually for Friday, well, a few days of last week. You can see the same picture there where it's been building. The only thing that upsets it is that low volume for Friday. So back to the pound. Yep, we're still moving lower. We still need to close above the 20 bar moving average. If prices are to move high, you can see that where this has occurred, prices have then reversed and moved lower. Certainly not out of the woods as far as the downside is concerned, given the backdrop of Brexit there. And then Bitcoin. Let's start off with the daily chart. We're starting to see rising lows here. We've also got some resistance here. This sort of setup, I'll just redraw that again, is inclined to break to the upside. It's a triangle formation with resistance at the top there. A pennant formation, I think, is what they called it in the old days of technical analysis, and could be an indicator of higher prices, as the 4 hour also is back towards the 200 bar moving average, and you can see this more clearly here. Again, that's the likelihood, is the market breaking to the upside. Watch for support at this 200 bar moving average, and in the 15-minute chart you will see that yesterday the market driving through the 200 bar moving average once again, and then overnight you will see it has become support. So watch for the market just coming back down and testing this, because we could get a really good trade off this, with the market then moving higher and being supported by the 4 hour 200 bar moving average as well. So I'll be keeping an eye on this one today. And then weekly chart, we're still a bit of a sideways move here. We've got more of a triangular shape there as well. Not that I pay much attention to these, I just know that from statistically, when you get that sort of pennant formation, the market does tend to blow out in the direction of where the resistance is. So again, just keep that in mind. And then other news, let's have a quick trip around the financial market, see what's going on. Deutsche Bank, very interesting. On Friday, the market bounced off Thursday's lows. So interesting to see that this 640 level was a reversal area. Again, it's only pure conjecture, but if the market does break this level, apparently, according to Charles Nenner, there will be some sort of big sell-off in the markets and a potential problem for Deutsche Bank. But certainly interesting to see how it bounced off this on Friday there. Implied volatility down on Friday from 1927 to 1772 because obviously the market moved higher. This will be lower as well. And if we just have a look without the numbers on there, we can see that we're getting to a situation where we could be towards the 20 bar moving average on the upside in the daily chart and heading back down to this one in the implied volatility. And we'll see what the market does when it gets there. A close back below will add some sort of upside momentum in the underlying, and obviously a close above on the upside as well. And then correction taken care of for the time being, but we'll see. I don't think it's over myself. There's not enough climatic action, but you never know what Trump's going to tweet, what the Federal Reserve's going to do either. And speaking of the Fed and interest rates, the amount of outstanding negative yield debt is growing. This is from 6 months ago. And you can see there we're sitting at 12 trillion of debt now, which is in negative rates, which is quite interesting. But let's just fast forward to the next quarter, and you'll see that we're now at 16 trillion. And this is all happening this year. This is not, 2 or 3 years ago. This is, as you can see here, it's the trajectory is vertical. It's exponential, that the negative yielding debt is growing so fast. Also found this brilliant site on Friday. It's inverted yield curves. It's worldgovernmentbonds.com. Absolutely brilliant. You can have a look at every country's bonds if you want to see which ones are inverted. But to make things easier, they show you a column of totally inverted bonds across the board. We've got partially inverted and minimally inverted there as well. But interesting to see that the UK is in here as well. And what's also interesting is that the US are just partially, I think it's only the 30-year that isn't inverted, but expect this column here to grow going forward. So we'll keep an eye on this. It makes things a lot easier. I haven't got to do any sort of research. And then there's another one as well for investing.com. You can go and have a look and see the individual rates. You can do this on the other one as well, but this one's just slightly easier. So for example, UK, and then you can have a look at the rates there, and you can see straight off that just bring that back, the 3 month there 0.744 and the 10-year 0.468. So we have the same thing here as the US, and I think the 2 year is the same, isn't it? We've got 0.502. Yeah, absolutely. And there as well. So the 2 and 10 year in the UK is also inverted. So none of this bodes well, and it's just fascinating to actually watch. But this website here, if you watch this, make a note of it as the link at the top there, and just come back and look periodically and just see how many more are actually moving from the partly or minimally to the totally inverted column there. The more that move over to here, the greater the global slowdown will become, and the more difficult it's going to be for the Fed to do anything also. Okay, well, apart from print money and send rates into further negative numbers. Okay, that will do it for this one. If there is anything else to report, I will let you know. But otherwise, as ever, thanks for watching. See you in the next one.